is the Fibonacci retracement levels. So I cannot stress how important retracement levels are, because a lot of the market investors and traders use retracement levels to pick their pivot points, to pick swing trading movements, to pick day trading levels. And so the more you understand how to use retracement levels, the better it'll be for you. So generally, whenever price moves from down to up, you are drawing a retracement level to assess whether price will retrace back to the original level where you started your retracement graph, right? So, and if it does reach all the way back, that's 100% retracement, right? Because obviously it returned back to the position where you started. Now, the key levels are 23%, 38%, 50%, 61.8, and here it's actually, it says 78.6, which you can use, but generally I prefer 72. 72. You can also use the previous, I think it was 76.8 that I just changed to, but 72, either or. So generally, what does it mean? Okay, so once you've drawn your retracement level, and I've gone over this in previous videos, I'll just go over it quickly again. If price bounces off the first two, actually the first four levels really, and even the last, technically the first five, but usually whenever you're on a shorter interval period, like a 15-minute chart, and price quickly bounces off to 38, and it's going up within that 15-minute period, you can confidently say if price has not broken this 38% level, that it is just continuing the trend, right? And that's generally true for the 50, 61.8, and 72 in the longer intervals. So like, for example, if you're on the daily or the weekly, and price seems to bounce off these key levels and not break past the 72, generally it means that over in the long term, like so days and weeks, or it's in the middle term, days and weeks, price will eventually get back to its highest position. It's high. It is only when price breaks this 72% level and hovers down below here that even if you see a price action then returning back up, that the overall picture, medium and long term, will continue to be downward, as my cursor is just showing the indication. So this level right here, I'm always concerned about a bearish market if ever price breaks this and closes. Where price closes is key to always remember. Price can swing up and down like it did right over here, swing as high as here, but where did it close? That's what we need to know, and that's where generally the market also is read by other investors to determine where they expect the market to be moving forward. So in a nutshell, these are the indicators. You can also use pre-used templates. Let me see if I can clear this chart of everything, and then reset chart. Yeah. Oh, I didn't do that. You can right-click to remove everything, remove all indicators, remove all. Okay, there we go. Perfect. You go back to a clean chart, and now you can just use preset templates that they have. They have one called swing trading, displaced estimated moving average, which they give you two moving averages. I believe one is for 20, and then they have a volume as well. You can use another template for swing trading, where they themselves set levels. These are S1s are for support and Rs are resistance, expected support and resistance levels from their initial, and I think they have different sets as well, so you can go in deeper. I don't use any of the preset templates that they have, but that's what they're for there. To your left over here, these are trend lines. Let me reset the chart again. 1 second. Let me remove. There we go. Trend lines. Trend lines are always good when you're trying to identify. I just moved to the daily. When you're trying to identify chart patterns, when you're trying to identify support and resistance levels, or if you just want to draw it for your purposes. Right here, what we see is a massive descending wedge. So I'm just going to draw that. I'm going to use this position where it went to the low. So I'm going to draw from here down, right? And then you take another trend line and you can draw from the top, really. Down there, right? So let me just extend this To show where this could possibly get to. Oh, yeah. So when your 15 minutes are up, they will pop this message up. So let me just reset this, and then I will cut right back into this chart. 1 second. All right, and we're back. Yeah, so I just had to re-enter myself back into the chart because the free period only gives you 15 minutes prior to you having to sign up to continue. Anyway, so I drew the two trend lines, just show you how to use trend lines. To the left is where you can get retracement levels, the tool to use retracement levels. I don't use any of these other ones because frankly I don't know what they mean, but more power to you if you do. You can draw your curves for your cup and handle formations. There is triangles used. There are, technical analysis has. I mean, you could spend months reading up on books for technical analysis. There are ways to use triangles. There are also ways to use Elliott waves, which I have no idea how to use. I haven't read into it, but I would encourage y'all to look into it because a lot of traders use it. So basically what I'm saying is when you know a majority of a market is using a certain tool like Fibonacci retracement, Elliott waves, over here you see cipher patterns, triangle patterns. Generally, they're placing their buys and sells at key levels according to these patterns. Therefore, you can expect the price to be attracted to those levels and rebound over past certain levels. Now, the other side to it is that, at least in foreign exchange, I don't know so much about cryptocurrency because technically cryptocurrency is supposed to be decentralized. However, you do have whales, and especially with Bitcoin now, price dropping this low, you better believe that there are going to be a lot of whales who are corporations in here, like banks who are investing a lot of money into Bitcoin, and therefore they will now start affecting price by manipulating the markets. And so because they know that there are certain levels that traders are expecting to for price to reach at to do expected things, often you'll notice the complete opposite of that happening. And what I mean by that is, for example, like currently we are in descending wedge, right? So we would expect upon reaching the apex for price to go up, right? However, I wouldn't be surprised if you would see, and this has happened on the Lumen chart, if you would see price reaching up here, and then instead of rather just coming and touching back down here, you see a flash crash beyond this wedge, making you think that, oh no, the price is going to be bearish for the next in a few weeks, and then obviously it retraces right back up into the descending wedge and then eventually breaks out. Because they want to create panic and they want to create FUD. Why? Because then they get more of it for cheap. Because the moment they create, once you break this pattern, other investors will think, oh, it came out of the descending wedge on the bottom end, meaning it's a bearish market. So everyone sells their position. And the big whales, they just collect right here, have added more money to their position, and obviously price returns where it's supposed to be and continues on up, and then they make a killing. And that's why they're whales. And that's why we're trying to whale up over here. And then what is this? This is a ruler? Oh, this is to measure movements. Yeah, like if you wanted to know how many bars were in a certain movement, how long it was, and how many days it took, that's the information you see in the box below to give you an idea. Or you can just count the candles. But it tells you the percentage of the price movement as well, so it's good for that. And to zoom in and zoom out, I don't use any of these other ones. Oh, this one's pretty important. Whenever you draw an indicator, or usually for trend lines and retracement levels, you can always, when you click on it, you'll see a little toolbar open up. I always lock it into place so that it doesn't move around when I am fiddling around with my other indicator tools. So that's that. And I think that pretty much covers what I use. Just to go over the map in general. On the bottom is the time, obviously, and on the right is the levels. You can move up and down by pressing it and then moving your cursor. You can shrink it up and down as well. There is a night mode for the chart if you don't like a white background. I believe you go to here to the settings, and is it over here? Scale properties. Let's see, is it over here? Light, yeah, you can go to dark. and then you can go to dark mode and then change that out. If some people prefer this, generally I just prefer the light, so I'm just gonna go back to that. There we go. Okay, and that's about it. You can incorporate you can change your list up to add the symbols that you want it to be there. So, for example, BTC USD. So now when you click on it, it automatically adds up to your symbol over here. Here's where you get news on the symbol that you're on right now, on the trading pair that you're on. And these are all customizable over here as well. I don't mess with this bar over here, but it's just a lot to do with posting your ideas and sharing other people's ideas and chatting with others on this website. I think Tradingview is an excellent website to enhance your trading skills. I do not get paid by them. This is not a paid promotion. I'm in no way affiliated with them. I just use it myself. So and there were users wondering how we use the chart. So I just wanted to make this video for that purpose. Hope you all enjoyed it. And we will see y'all in a few hours where we talk about the lumens again. Peace!